Let's stay in the realm of the AI build-out. According to a new report, AI revenue may have reached a tipping point. Analysis from Exponential View shows global AI sales, excluding China, reached $25 billion in the first quarter of this year. Depreciation from data center and chips investments, well, that's expected to be just $21 billion. So, is the AI build-out finally paying off? Azeem Azhar, founder of Exponential View and an author on that report, as well as a Bloomberg contributor, joins us now. We've talked about this for so long. The machine where you know the numbers that are going in, capital expenditures. It's just been very hard to find the numbers that are coming out the other side. You seem to have found them.
Well, thank you for having me on your show, Ed. And I thought it was really important that we do find them. The supply side is well understood. How many picks, shovels, chips, data centers are being built, and how much does that cost? Piecing together what's happening on the demand side is much harder. The biggest AI companies are privately held. They don't need to disclose. And the hyperscalers, the big three, AI is only a small subsegment of a subsegment of their businesses. And so they don't really disclose. But there are enough clues. And for the last 6 months, my team and I have been looking at every public disclosure that we can up and down the supply chain, from the hyperscalers, from well-sourced leaks, to reconstruct the AI economy and to reconstruct specifically what is the top revenue coming in from customers, enterprises, and consumers without any double counting. And that's where what we published today, and that's the $25 billion in Q1 2026 that you referred to. And I think it's really critical. This lifts the fog of war.
You can also look forward, right? So you're exactly right. I mentioned a moment in time, and that was that period gone. But if you looked, I guess, on an annualized revenue run rate basis, you can say, per the report, that actually there is continued growth, accelerating growth in those revenues too.
Absolutely. I mean, we view if you annualize the current month, we're at $170 billion of annualized revenues without any double counting. That represents a 200% growth rate on the previous point this time 12 months ago, but the current growth rate is still at around 200%. And what's really remarkable, Ed, is that you would expect that growth rate to start to slow down. And in fact, we were caught out by this because we had in our modeling from the start of this year predicted it would slow down. And what turned out to happen was that Anthropic went on a real tear and kept the growth rate high.
We're just showing the chart that goes back to what I said at the top. The point being quarterly revenue pace and current number is now exceeding the depreciation on the hardware side. I'm assuming, Azeem, that you're a great student of history, just as I am. And what's so interesting is, like, you can go back and say, well, what happened at the advent of the smartphone, or even of cloud computing, the internet, if you want? Where does what's happening in AI on those real revenues stack up against those prior moments in technology history?
Those moments are epic. They were some of the fastest growing business waves we've seen in the United States, worldwide, ever in history. AI real revenues is growing roughly 3 times faster than the internet grew, roughly 3 times faster than mobile grew. So this is a really fast, in-demand product that enterprises across America and consumers around the world are really buying into at the moment.
Azeem, real quick to end, what happens next?
Well, what happens next is we see more of Main Street trying to get this right. We see more competition. I think people are concerned with the price of some of the proprietary models. We'll see large enterprises rotate towards open source, which provides better value for money. But I do think that as enterprises get better at doing this, as Main Street understands how to use AI, they will double down more.